Getting tons of questions from people saying, what in the world is happening to the markets? I'm not kidding. Right before I turned the video on, I got a text from a friend who said, what is happening with the markets? Question mark, exclamation, question mark, emoji. I'm going to tell you three things, three reasons why the market likely is behaving the way it is. I got that coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. If you would have told me, even on Monday, Tuesday, hey, listen, we are not going to know who wins the election the day after or by midnight of election day, I would have said, of course, yeah, we all knew that. I actually guessed, I will tell you, I guessed on our show last week that we would know by Friday, by a week. So we'll see. But if you would have said, yeah, with all that uncertainty and COVID cases rising and shutdowns happening, the market's going to absolutely go nuts to the upside and have a huge surge, I would have said, go take a nap. Yeah, that doesn't make any sense. But that's what's happened. That is what's happened. The market is just going gangbusters yesterday and thus far today. Why? Why? Everyone has been asking me. Again, I got that text from a friend, got a text from a very, very intelligent individual, Harvard grad, attorney, last night saying, what is going on with the markets? None of these financial folks know anything, is what he said, which is sort of funny because anyone that's trying to predict what's going to happen tomorrow, yeah, they don't know anything because it's unknowable, like the future. So, but there's three potential reasons why the market is surging right now despite the uncertainty. I'm going to share those with you right now. The first reason is that markets actually like it when there are split powers in Washington, D.C., within Congress. They actually like it. Now, you might say, well, wait a second, there's so much uncertainty, so the markets must like uncertainty. No, they don't. No, they don't. It just seems increasing more likely that we're going to have split powers as opposed to a red wave or a blue wave, right? Right now, and I have no idea when you're consuming this, it's looking like and the ability for Trump to be reelected is extremely narrow. There's still a chance, but it seems extremely unlikely. However, it does look like Senate will stay Republican. And Wall Street likes split power. It does. One of the reasons is because split power can't get as much done. So it's not that Wall Street likes uncertainty, it's that Wall Street hates uncertainty. And this uncertainty that we're feeling right now is actually going to likely create more policy certainty moving forward. And we've talked about the upcoming election a lot on this channel. So again, hit that subscribe button if you haven't been digesting that. But I've revealed to you, all politics aside, political preferences aside, markets actually do really, really well with a Democrat in the Oval Office and a split Congress, split power. Like that's, if you look back at history, that is technically what has historically done the best. And so it's looking like that's what we're going to get, and therefore the markets are surging. The second reason why we could be getting this huge surge yesterday, today in the markets, this big post-election rally, is simple, and that is markets actually do really well in election years. It is still a popularity contest, and I'm not talking about electoral college versus popular vote. No way. I'm not touching that one. But it is a popularity contest, and ultimately, markets historically have done well during election years, and we've talked about this before on this channel. The election cycle, right? A president is in office for 4 years. So if we look back on all previous presidents and the stock market, on average, which of the years does the market tend to perform the best? Good news is it tends to do well all of the years, by the way. But the best year is the fourth year. That's an election year. That defies logic, but that's what history says. So one other way to explain this is, well, when you combine the likely certainty of a split Congress here, case number one, inject that with case number two, that typically markets do enjoy a good year during election years. That could be another explanation for the recent market surge. But the final reason is really my biggest belief. And the biggest belief that I have that markets are surging right now is because of how the polls are standing right now, and that likeliness of a blue Oval Office with split powers in Congress likely means more stimulus. It likely does. This is not, the market's not surging because COVID cases are surging. The market's not surging because it no longer thinks COVID is that big a deal. The market's not surging because European shutdowns are actually good for the economy. Like the coronavirus and the world economy is still very, very much in focus. And yet the amazing rebound we've had in the markets is because of the coordinated efforts by central banks and governments to help stimulate and inject cash into the system. We've talked about that many times on this channel, the overall liquidity. Well, recently the administration has not been getting it done. That stimulus, like I've said before, is sort of dead in the water. It's not really happening. So the likelihood of the way the election is playing out, it brings more confidence that we will get more stimulus. And it looks like it's going to be needed. I mean, we hit another record yesterday, I believe, of new COVID cases here in the US, and obviously areas of Europe are shutting down. And so likely we're going to need more aid, more stimulus, and the markets like that too. They may like it because it's too much. They may like it because it backstops people right now, but it creates excess in the future. I think there could be a lot of unintended consequences of all of this stimulus and all of this, this extra money printing, all that sort of stuff. However, the markets like it. And I think right now, the way things are playing out with the election, it's likely that we're going to get it. So those are my three reasons why I think the market is surging. It does seem, again, almost unbelievable. And as someone who enjoys talking to clients when markets are up, it makes my role a little bit easier. All financial advisors' role a little bit easier. I talk all the time about making sure you've got the right investment philosophy for your overall financial plan, your comprehensive financial plan. So unfortunately, I think a whole lot of people have looked and said, I should be investing this money. It should be long-term money, but I'm going to wait until after the election. And you might be missing out. You might be missing out. So that's the reminder. I feel those temptations too, but that's the reminder that you've got to have your investment philosophy connected to your overall financial life. I've talked to a lot of folks, a lot of clients, where there's a question over some dollars. Should they really be long-term or short-term? Will I need them? Will I not? Well, that money should be short-term. You shouldn't have had that money in the market, especially with all the risk. But if you know, hey, this is long-term money, then the right context, the right financial plan would have said, yes, I know there's a lot of uncertainty. However, this money should be invested for the long term. And that leads us to the second thing, and that is really your overall investment philosophy. Even for the long term, it's hard to just invest right now blindly for the long term. Long-term investing takes a lot of faith in the markets, a lot of patience, and a lot of resisting temptation. Well, here's the thing. You guys have heard me say this before. Your investment structure needs to be connected to your financial plan, but then it needs to be disciplined, low-cost diversification, connected with momentum strategy, a momentum strategy where you can overweight the areas that have momentum right now. And if momentum shifts, or if this thing all of a sudden is really, 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 really hot and then drops, you've got the ability, you've got the automatic, unemotional ability for your dollars to pivot. Right now, your diversified mix of low-cost investments have not changed. You still have large cap US, which is great. You still have small cap, which is not as fun. You still have international, but even though those areas aren't doing that well. But your momentum strategy has stayed invested during this time, even though it got to cash in March, but it stayed invested during this time, and it's all growth. It's all large growth, the area that is doing the best. And you're not using momentum in international or small cap right now, because that's not where there is momentum. It's in large and growth right until it's not. So right now you've got that momentum strategy overweighting that area, which is exactly where you'd want to be. If that's not the philosophy you're using, I'd contact your CFP and talk to them about it. If your investment choices aren't connected with your overall comprehensive financial plan, you've got to talk to your CFP about that. If you don't have one on your team, contact one on my team. You can find us online at korhorn.com. That's Korhorn with a K. wisemoneyshow.com. You'll find us there as well, or you can send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.